Hey everybody, it's Brian here from alphatrends.net. Today is Friday, the 29th of July, and the month is over. We finished with a gain of 3.5% for the S&P. NASDAQ doubled that, semiconductors doubled that, and the biotechs as well. So oil's the big loser this week and this month. And I apologize to those people I made fun of last week for calling for this week to be down because we did lose money in the S&P 500. It was down 12 cents. So the people who have been arguing with me about a top, for now, you are right. But there is no evidence of topping action here that I can see on this chart. I was being facetious there. We closed down 12 cents on the week. We are still trading in this range. And as I've pointed out numerous times, consolidations tend to resolve themselves in the direction of the primary trend, which is obviously higher. That doesn't guarantee that this market will continue higher from here, but that's where the odds lie, and that's what I'm most interested in. What are the best odds for success? And if I'm incorrect, where do I cut my losses? Well, if we break down below the bottom end of this band of support that we've seen, this was tested once again this week, then I would become more defensive on the intermediate term. But until we see that happen, we are still within a primary uptrend on the daily, weekly, monthly time frame, and there's no reason to be bearish a market that is making new highs. And today we saw a new high intraday at least. It didn't hold on to those gains as we saw a slight pullback. We didn't hold on to the entirety of those gains, that is, with that slight pullback right here at the end of the day. But we remain in a bullish environment for stocks, and that's what makes most sense right now is to continue to be long and not to fight the trends. The people who fight the trends have been trying to pick a top in the NASDAQ because they thought it was going to find resistance here. They thought that this would be resistance, and those were potential levels of resistance, but there is actually no sign of resistance. And even here, as we get out to new highs for the year in the NASDAQ, and challenging last year's highs, there is no evidence that the sellers are taking control. Again, looking at this 30-minute time frame, we see we've got this rising 5-day moving average. At a bare minimum, we need to see the market back below that 5-day moving average and making a pattern of lower highs and lower lows before you can short with any confidence. It may be next week it looks something like this, but right now that's not what it does look like. We have to go with what is. We have to recognize the conditions we're in. The market's extended, but it's a solid uptrend, and to just try to short because you think it's up too much is a recipe for disaster. It works sometimes, but the times when it doesn't work is when it gets to be spectacularly painful for those trend fighters. Anyways, we've got this, in a narrow band that's been rising, and that's the key, though, that it is rising until it breaks, I think, below probably 114 and a half-ish and holds below there. We remain innocent till proven guilty and are very aware that the market is getting overbought and that it's time to raise stops, not time to sell short. The Russell 2000 gained some ground this week, as we saw in the closing numbers. And, here we see that we've got what should be solid support down below us at these prior levels. And right now, we've got continued in the on the 30-minute time frame. We still have a rising 5-day moving average. We had a little shakeout below it, but the direction of that moving average is rising. And more importantly, if you were to short below there, where does it have the potential to go before it's likely to encounter support? I wouldn't really become more intermediate term bearish until we break down below 119-ish. Now, that doesn't mean we couldn't pull back and there aren't opportunities for short-term traders to make some money on the short side, but we remain in a solid uptrend. We've got this little trend line here that was tested again today, and until we break the trend line, until we break below the 5-day moving average and the important support, there is nothing here that indicates that you should be bearish. The semiconductors are a great example of that. They were up again this week. Semiconductors this week were up 2.5%, and this group has been the one that has been really super strong. This this month, again, up 11.5%. And clearly it's up too much, it's overdone, it's all this, and the oscillators are telling us this and that. And, you can look at volume and say, well, volume's diminishing on the S&P 500. And guess what? That's the pattern of a rising market. The market rises on light volume. This is not a new concept. If you take a look and go back further in time, you'll see that the periods of rising stock prices have come while we have a diminished volume. So only price pays. Remember that. Be aware of volume, but recognize that the only thing that matters is when we break down below support, the moving averages turn lower, and then we make lower highs and lower lows. That's when it's time to become bearish. Clearly, the semiconductors are not telling us it's that time right now. We have this solid uptrend where we've seen, you could say, well, that uptrend line was broken. Uptrend line, trend line breaks don't mean a reversal. They mean maybe a slowing of the trend. But if slowing of the trend is 2.5% gain this week, it's still quite a strong trend. And here's our volume weighted average price for the week, which we closed right at. We are still above a rising 5-day moving average. We've come a long way quickly, and it's due for some consolidation or pullback. But so far, there is no evidence of that. If the semiconductors are going to break down, it does make sense to pay attention to them because they've been the leaders of this market. And I think that, if we were to see something like this next week and it gets trapped below the 5-day moving average, then perhaps it's time to sell short for aggressive traders. But clearly, it's not going to, a pullback is going to be just that, a pullback. It's not going to do damage to this major uptrend in the breakout of that, multi-year range that we've seen here. The biotechs are right up against that prior band of resistance in here. They've come from 240 to 290 basically. So close to a 20% rally off these lows in the biotechs. It's not time to be looking to make purchases because we have the potential for resistance. It's also not time to sell short because we have zero evidence that there is in fact any resistance in here. We see that we have a rising 5-day moving average and higher highs and higher lows. If we want to get bearish, wait for that pattern to diminish. It's not about picking tops and bottoms. It's about participating in the trends that exert themselves for days and weeks at a time, unless you're just interested in, strictly scalping environment. But that's not where the real money is made in the market. Apple gained back some ground here this week as it came back to that volume weighted average price from that low, and we are of course from the shakeout low that became support. You had to bet on earnings basically to take advantage of this move. I think that, looking at Apple on a longer term basis, you can still see that we are, let's just back this up a little bit so we can get a better perspective, that we've got this band of resistance along this trend line that is, it's not meant to be drawn with a straight edge and a ruler, but more of, like a crayon like you see in here. This has been resistance since this market started breaking down. We've got a declining 200-day or 40-week moving average. So, to me, it's about what makes most sense. Do I want to chase Apple up here? No, I definitely don't. I think that if it's to pull back in the coming weeks down towards 100, 101, then it could be setting up for a better opportunity for the long side. But it's still technically in a downtrend when we look at the lower highs on this weekly time frame that, it's going to have to, break that pattern before we can officially get bullish on this stock for more than a short period of time. Bonds we spoke about last week and mentioned that it looked like a pullback within the uptrend, and we spoke about this level that if the bonds could get back above there, then it seemed like they should be able to continue to move higher. They did in fact do that. What you'll notice is that they had broken this band of resistance, but they'd done so on a gap, and we don't chase gap open openings. We wait for them to settle down. This is really the better place to be a buyer. Once it reemerged over here after that gap up and held, it reemerged to stop below that level. And here we are now seeing higher highs and higher lows on the intermediate term time frame, which is what we still see on the weekly time frame. This is just looking simply like a pullback within a primary uptrend. Google had a great week after their earnings, and if you recall, go back 3 or 4 weeks ago when we spoke about this, I was saying that it looked like a bear trap, that it looked like from a failed breakdown should come a fast move higher. I certainly didn't expect anything like this, but here we are now in Google. Do you want to be a buyer, asking yourself where has it come from and where does it have the potential to go? And I would say no, I wouldn't want to be a buyer in here after it's just rallied from 675 to 800. But again, know your time frame, know what works best for you. And congratulations to Ackman. He, his short in this GNC, he said was going to zero back in December of 13. Oh, wait a minute. It wasn't GNC. It was Herbalife. Darn it. He had mentioned this one was going to zero back here. Anyways, pardon the facetiousness. It's tough being an investor, and especially if you've got everyone in the world watching your portfolios. But when you make these bold claims that a company is going to go out of business, and here it is a couple years later, double where you made that call, you kind of are asking to get made fun of. Anyways, we had a great week in Alpha Trends. If you haven't taken a look at a free trial, then please do. Thanks. Have a good weekend.